Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 8th, 2024, and we're diving into Akamai's third quarter earnings report. Akamai, a leader in cybersecurity and cloud computing, has just released its financial results for the quarter ended September 30th, 2024. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Akamai's performance, especially as they hit a significant milestone this quarter.
Revenue and profitability overview. Let's start with the top line. Akamai reported a net revenue of $1.05 billion for the third quarter, marking a 4% increase year over year. John, can you elaborate on the revenue growth and its components?
Absolutely. The revenue growth was primarily driven by a 17% year-over-year increase in their security and compute segments, which now represent 68% of total revenue. This growth is a testament to Akamai's strategic focus on these high-demand areas. However, it's important to note that their delivery revenue declined by 16% year-over-year, which slightly offset the overall growth.
Despite the revenue increase, Akamai's GAAP net income saw a significant drop of 64% to $58 million. What factors contributed to this decline?
The decline in GAAP net income is largely due to an $82 million restructuring charge, which impacted their income from operations. This charge was related to severance costs and asset impairments following recent acquisitions. On a non-GAAP basis, their EPS was 59 cents, only a 2% decrease from last year, indicating that their core operations remain strong.
Operational efficiencies and future outlook. John, let's talk about operational efficiencies. Akamai's non-GAAP operating margin was reported at 29%, slightly down from last year. How is the company managing its operations?
Akamai has maintained a strong non-GAAP operating margin of 29%, despite the restructuring charges. Their adjusted EBITDA increased by 2% to $426 million, reflecting effective cost management and operational efficiencies. Additionally, they generated $393 million in cash from operations, which is 39% of their revenue, showcasing robust cash flow management.
Looking ahead, what can investors expect from Akamai in terms of strategic initiatives and financial guidance?
Akamai is focusing on expanding its security and compute offerings, which are expected to drive future growth. For the fourth quarter, they project revenue between $995 million and $1.020 billion, with a non-GAAP operating margin of 27 to 28%. Their commitment to share repurchases, with $166 million spent this quarter, also indicates confidence in their long-term prospects.
Leadership insights and strategic initiatives. Dr. Tom Leighton, Akamai's CEO, mentioned confidence in the traction from new products. How do these strategic initiatives align with their current performance?
Dr. Leighton highlighted the strong momentum in their security and compute segments, which grew 14% and 28% year over year, respectively. These areas are critical as they align with global trends towards increased cybersecurity needs and cloud computing adoption. However, the delivery segment saw a 16% decline, which the company is addressing through strategic investments and product enhancements.
How does Akamai plan to leverage these growth areas to enhance its market position?
Akamai is investing in innovation and expanding its product offerings in security and compute to capture more market share. Their focus on these high-growth areas is expected to drive sustainable revenue growth and improve profitability over the long term.
Risks and challenges. John, let's discuss some of the risks and challenges Akamai faces. The restructuring charge significantly impacted their GAAP operating margin, which is now at 7%. What are the implications of this?
The $82 million restructuring charge was a strategic move to realign resources and support growth initiatives. While it temporarily reduced the GAAP operating margin, it positions Akamai for future efficiency and growth. However, the the delivery segment's decline and competitive pressures remain challenges that the company needs to address.
How does Akamai's debt situation affect its financial health and strategic flexibility?
Akamai's convertible senior notes contribute to a high debt level, which could limit financial flexibility. However, their strong cash flow and strategic focus on high-margin segments should help manage this debt effectively. It's crucial for them to balance debt management with investment in growth areas.
Key takeaways. In summary, Akamai has delivered a solid performance with a 4% revenue growth year over year, driven by its security and compute segments, which now account for 68% of total revenue. Despite challenges, their non-GAAP EPS remains strong at $1, and they continue to invest in share buybacks, spending $166 million this quarter. John, any final thoughts on Akamai's investment prospects?
Akamai's strategic focus on high-growth areas like security and compute positions them well for future success. While they face challenges in the delivery segment and high debt levels, their strong cash flow and operational efficiencies provide a solid foundation for growth. Investors should keep an eye on their ability to execute on these strategic initiatives.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Akamai's performance in the comments below. Until next time.